There's a major shift in tariff policies. We want to see what's happening on the ground in the most important ports in the country. Today, we sit down with Noel Hacegaba, who's the COO of Port of Long Beach, which is one of the largest ones, including LA. They're the largest port in the country. Noel is here to tell us what he sees on the ground, how the port and the shippers are impacted, and what's going to happen in the long run based on what they forecast.
Keeping our trade partners guessing may be an effective strategy to get those countries to the table and negotiate trade deals, but keeping our shippers guessing creates an unprecedented level of uncertainty.
I'm Siama Korami. Welcome to California Insider. Noel, it's great to have you on. Welcome back.
Thank you. It's great to be back.
You represent the Port of Long Beach, and this is a big asset for California. There's some changes to the trade. Can you tell us what's happening? What are you seeing at the port?
Well, there's a lot happening, and the Port of Long Beach is certainly an asset for the state of California, but also for the nation. All those containers that cross our docks on a daily basis eventually reach all 435 congressional districts. We just released our latest economic impact study, and we found that the Port of Long Beach alone generates almost 700,000 jobs in Southern California, over 1 million across the state of California, and almost 3 million jobs across the nation. So it's a massive economic engine.
700,000 jobs.
Just in Southern California.
And how did this report work? Is it because of the imports and exports, or?
It's all the port activity. So all those containers that cross our docks that we handle on an annual basis, there's this force multiplier effect. We certainly need our dock workers to move those containers from the ship to the terminal, but we need truck drivers, we need rail operators, we need warehouse workers. And if you follow that container across the supply chain, think of all those jobs and all the humans that need to handle the containers and the contents inside those containers. That's how massive of an economic engine the port is.
And is there going to be impacts with the trade with China and other countries with the change in the trade with the tariffs?
Anytime there's a change in trade policy, there are impacts. For example, to date at the Port of Long Beach, we have felt the impact of some of the tariffs that have been announced and some of the shifts in trade policy. And the shipping community in general is always reactive to these shifts in trade policy. And like all of us, we're trying to anticipate as best we can what that change in trade policy may lead to in terms of sourcing for goods, in terms of the timing of when those goods should be imported to avoid increases in tariffs. So for example, leading up to President Trump's second term in the White House, there was a lot of anticipation that there might be shifts in trade policy, there might be new tariffs. And so a lot of shippers decided to advance their orders. We call that front loading in the industry, where you're basically moving up your production cycle to get those goods into the U.S. before those new tariffs are levied. And for that reason, at the Port of Long Beach alone, we had about 11 months, consecutive months of year-over-year increases. So if you go back to June of 2024 through April of 2025, that entire period, we had near record volumes. As a matter of fact, that catapulted us to have our best year on record in 2024. We handled 9.6 million TEU. And that continued through April. May, we started seeing the opposite effect. There's only so much front loading a shipper can do. At a certain point, you fill your warehouses and you have so much product that's just waiting there to hit the store shelves that you have to slow that movement of cargo. And so that's what we saw in May. So following 11 consecutive months of year-over-year increases, for the month of May at the Port of Long Beach, we saw an 8.2% drop year-over-year. And that was driven by a 13% drop in imports alone. And for the month of June, that continued. So for the month of June, we were down about 16.4%. All in all, I will say this though, for the first half of 2025, from January through June of 2025 at the Port of Long Beach, we're still 10% ahead of where we were last year. And last year was a record year. So it's interesting to see how trade policy is shifting and how that's materializing on the ground. So far, we've benefited from that, but it's just a matter of time. Unless there are changes, unless some of these trade negotiations are resolved, this unprecedented level of uncertainty will have that effect. And that's why we're monitoring this very closely.
How much of a role you guys play on the export side? Because the import side, we understand that you guys have a big role, right? What percentage is export? What percentage is imports?
So in general, for every 3 imports, we send 1 export. That's the ratio that has been our experience in recent years. Certainly the retaliatory tariffs from our trade partners overseas have affected that as well. So just as we're beginning to see a slowdown in imports, we're also beginning to see a dent in our exports. I will say this about the current trade policy situation. Keeping our trade partners guessing may be an effective strategy to get those countries to the table and negotiate trade deals, but keeping our shippers guessing creates an unprecedented level of uncertainty. And that's what we're seeing right now. Everyone's trying to make sense, and they're trying to guess, are those tariffs going to stay in place? Will there be a pause? Will they be deferred? I remember last year during the presidential campaign, there were some who thought that if President Trump were to be reelected, that some of the trade policies that we saw back in 2018, 2019 may come back. And so some people were thinking, well, we've seen this movie before. Well, what we're seeing today is not a rerun of 2018, 2019. It may include the same characters, but this is not even a sequel, because the way that trade policy is being drawn and the way it's being announced is completely unprecedented. The retaliatory tariffs alone that were announced on Liberation Day, that was an announcement that affected virtually every one of our trade partners. In 2018, 2019, trade policy was focused primarily on a few countries, primarily our biggest trade partners, primarily China. And for us at the Port of Long Beach, that's a big deal. We were disproportionately impacted back in 2018, 2019. At the time, China accounted for about 70% of our volumes in Long Beach.
Wow.
And today, that's down to 60%. So you see the effects of that trade policy from about 6-7 years ago. But what we have seen on the reverse is we've seen countries in Southeast Asia, like Vietnam, their market share has risen about 10 percentage points. So as we've seen fewer containers coming from China, for example, we are seeing more containers come in from places like Vietnam.
And how was it in 2018 and 2019? That was a 10% tariff. What was the tariffs at that point, and how did you guys get impacted at that time?
At the time, it was similar to our experience now, although not at the same pace. And at the time, the tariffs that were being contemplated between our respective countries was anywhere from 10 to 25%, which if you ask your average shipper and retailer, that's a big deal, right? Because as a retailer who sources goods overseas, brings them in and sells them to consumers here in the U.S., you have a couple of options. You either absorb those increases. Tariffs effectively are additional costs, right? Tariffs are taxes. So the retailer either has to eat that or they pass it on to their customers. And what we're seeing today is there was some absorption of that, but it doesn't take very long for these retailers to have to course correct and pass on some of that to consumers. And this uncertainty that we're seeing is creating an environment where some of these shippers, in order to mitigate the impacts to their bottom lines, are beginning to pass on some of those costs to consumers.
You mentioned uncertainty, and if there was certainty right now and the numbers were high, would that have an impact? Does certainty matter even if the numbers are high on the tariffs?
Certainty matters. If you ask the shippers, they will tell you that in order for them to plan their shipments, they follow certain regimented production cycles. As a matter of fact, every year there are different seasons and there are different periods. And a lot of that's driven by, for example, we have coming up the fall back to school season, we've got the holiday season. And so a lot of those shipments start coming in July, August, September. When you have a situation like the one we're all facing today, and there's uncertainty about when certain tariffs will go into effect, It incentivizes shippers to advance their shipments. So that changes the entire production cycle. But again, there's only so much warehouse capacity. There's only so much that these shippers are willing to carry in storage because there are carrying costs. And no one wants to run the risk of losing a season because if a product misses its season, it's not like you can just store it for a year and then put on the store shelves the following year. It's hard to store Christmas trees, for example, right? So that's the reason why a lot of these shippers they're trying to mitigate the impact as best they can. And some of them, in order to keep the customer base, are willing to absorb some of those additional costs. But that's not a sustainable strategy. At some point, some of those additional costs are going to have to be passed on to consumers.
You mentioned the shippers. Are these the importers, the middlemen that are buying from other countries, or are they just the actual shippers? Like, is there a difference?
Yeah, it's a great question. So when I refer to shippers, these are the companies that import goods. Some of them are big box retailers. These are the stores that we as consumers visit to buy our goods. Others are importing parts and components to manufacture products here in the U.S. So the shipper community varies. Those who are in a pickle trying to figure out how much of these tariffs they're going to absorb or pass on to customers are primarily your retailers. These are your big box retailers. These are your stores around the block that are having to manage and navigate this tariff environment we're in.
You mentioned that the volume, you had a lot of volume with China. It went down to 60%, now 10% is coming from Vietnam. Do you think there will be a trend that you will see different countries trade with the U.S.?
I've thought about that, right? Is there going to be a fundamental restructuring in terms of our trade relationships and the competitive landscape? I think it depends on where these trade negotiations end. Back in 2018-19, the U.S.-China trade debacle led to about a 10 percentage point drop for us at the Port of Long Beach in imports from China. And as I mentioned, at one point we were at 70%. China by itself accounted for 70% of our shipments. That's down to 60% now. And then you saw other countries like Vietnam and Southeast Asia that emerged and captured most of that market share. I think that the current environment may accelerate some of these shifts that were already in motion. The shift from China to Southeast Asia, the shift in manufacturing, was accelerated since 2018, 2019. And I have a feeling that may continue down the line. But there's also another trend, and that's what we call nearshoring. So a lot of shippers, in an effort to try to mitigate the impact of this new trade policy, they're now diversifying their source markets. There's a trend called China Plus One. Maybe they continue to manufacture in China, source their product from China, but now they're selecting another country, right? It could be a country like Vietnam and Southeast Asia, or it could be Mexico, right, which is closer to the U.S., and that's what we call nearshoring. So shippers are looking into the future. They're trying to forecast where all of this is going to land, and they're trying to make those decisions today so that they're in a better position years down the line.
In terms of the cost, you mentioned the cost will come to the consumer. Is there a scenario where some of these countries will eat some of these costs? Is that possible? Is there enough margins left for the producers to take on?
Absolutely. So as a shipper, right, especially the big shippers that have leverage, they can go to the manufacturer and say, look, I'm not going to absorb 100% of the tariff. So I'm going to need you to absorb some of it. I'll absorb some of it, and the consumer may absorb some of it. And those decisions, there's no magic formula. I think every shipper is different. They're unique. They have different relationships with the manufacturers, and each of them will have to make their own decisions about how to absorb the total increase that results from this tariff. But there is some activity where some of these retailers, for example, are trying to get the manufacturers to absorb some of that.
Do you see a change in the type of products that are getting imported and exported based on the tariffs?
It's a good question. So far we haven't noticed, but most of the time, when it comes to specific products, we learn about that after the fact, because a lot of the data that reports that is released after shipments have already arrived. I think the biggest driver is not so much the product or the line of product as much as the country of origin, because that's what the tariffs target. So for example, at the Port of Long Beach, we're the nation's second busiest seaport. For the first 4 months of this year, we led the nation in total cargo that we handled.
And the other one is LA, right?
And the other one is LA, right?
Which you guys compete with, right?
We collaborate on environmental initiatives, on safety and security. When it comes to cargo, yes, we each go after our cargo. So when we look at our top imports, apparel, electronics, footwear, we haven't seen a seismic shift like we did during COVID. During the supply chain crisis, during the pandemic, we did see a shift as folks were confined to their homes and they couldn't spend their disposable income on going to concerts, ball games, restaurants. They were trying to make their lifestyles more comfortable. So they were ordering a lot of furniture, they were renovating their houses. So we did see a shift, but we haven't seen that so far as a result of this latest trade situation we're in.
How do you track these items? Do you track based on the volume, or do you track them based on dollar amounts? How much information do you guys have as the port?
So as a port authority, we track the volume. So we know how many containers we import, how many containers we export. So we do track the volume. The contents, we have access to that data, but again, it's something that is reported after the fact. But there is so much data available today that enables us and all of our partners across the supply chain to track containers. As a matter of fact, just in the last few years, we developed a digital solution, a digital platform that gives us as a port authority and all of our partners the visibility they need in order to be able to track their container from origin to destination. We call it the Supply Chain Information Highway. And it's a way to give all of our partners that visibility they need, because think about it. The supply chain is a system of systems. You've got different industries and sectors that intersect. You need ships, you need ports, you need trucks, you need trains to move those containers from origin to destination. So if we can provide and we can make the data available to those who are making decisions about how much labor they're going to have to allocate, how much equipment they're going to need, it makes the entire system more optimal. And that's the whole intent behind the Supply Chain Information Highway. But I mention that because that platform gives us access to the data, and it also gives visibility to all of our partners about the whereabouts of that container.
And do you know what's in them? How much bicycles are coming, or how much?
Yes, we do. We track it. All that information is captured anytime you have a shipment arrive in a container. We have visibility to what's inside those containers.
In terms of the things that are coming to the port, like if there's to be some smuggled things or drugs or things like that coming, how much visibility do you guys have as a port authority?
We rely on our security partners to be vigilant about what comes in, what goes out. Certainly we have visibility, but there are other agencies, for example, Customs and Border Protection, the U.S. Coast Guard for sure, and other federal agencies that keep a close eye on the contents inside those containers. And we have a strong partnership with them. We're constantly sharing information to ensure that whatever comes in or leaves our docks is legal and keeps our community safe. So I would say that it's a very strong partnership. There's 24/7 vigilance when it comes to goods that either come in or leave our port.
Now we go to Andrew Sorcini with Beverly Hills Precious Metals, who's sponsoring this video. The dollar has lost about 10% of its value over the last 6 months. Andrew, you've been in the gold business and you've been watching currencies, and what's happening?
Well, when we've seen the dollar get devalued by a lot of the BRICS nations, which are Brazil, Russia, India, China, South Africa, and a slew of other countries out there, they're trying to not use the dollar anymore. So the dollar is actually going down in value, but gold and silver are up about 25% each this year.
A lot of us that have international experience, we understand that the dollar is not really replaceable.
I do ultimately believe that. I think that the dollar does need to be backed by something real. So, for example, in June of last year, okay, the Saudi Arabia did not renew its contract for the petrodollar. It was a 50-year deal. It lasted exactly 50 years, from 1974 to 2024, and they did not renew it. So before that, the dollar was on the gold standard. It was backed by real gold. But when the dollar was backing the oil trades out of Saudi Arabia, that made it so that if China wanted to buy oil from Saudi Arabia, they're trading in the dollar. It was a great, great move for the U.S. and for the dollar. But now that that is no longer the case, the dollar is struggling to find its place, but it is still the top currency in the whole world. It's still the world's reserve currency, but I do believe we need to go to a gold-backed dollar in some way.
In your space, there's a lot of people that talk about gold and they hype things up. They always say the dollar is going to crash, and there's a lot of hype.
It is true. There's so many companies out there that will call you and say, we just got 28 gold coins that were on the bottom of the ocean for 500 years on a shipwreck, and we've taken them out of the ocean, and we've got like 43 coins left, and you need to buy these today or you'll never get them again. You guys don't need to worry about those gimmicks here. We just offer gold and silver. We don't pressure people into doing it. And we don't really use the whole sky is falling thing to get you to do it. It's just gold and silver are a great hedge. Here in the United States, after the Great Depression, or probably even more so after World War II, we felt so sheltered that we're always taken care of here in the U.S., and that we don't need things like gold and silver to protect everything that we've worked for. But really, it is a great thing to own as part of your portfolio. It's the anchor, so to speak. When your real estate or stocks are down, your gold and silver will go up in value. So it really is a good thing to have in your portfolio. We've educated so many Americans, especially here right in Los Angeles, being born and raised here in California. I've actually been in this business for almost 40 years, based out of Los Angeles.
And this is a tool for preserving capital. It's not a money-making tool. It's like you have to go into it from the perspective that this is going to help preserve capital, not make extreme returns, even though in the last few years that has happened, right?
That's the number one reason that people should invest in gold and silver, because one way that it preserves capital is through inflation. The things that we buy with our dollar are starting to buy less and less because the dollar's lost a little bit of buying power due to inflation. But when gold goes up with inflation, that's how you offset it. And it's a great tool for that.
And can people hold this in their IRA accounts, retirement accounts?
Right now, that's a very popular way to do it. And people always have a lot of questions on how this works. So I do recommend that people reach out to us. But you can take an IRA, a 401k, you can take a government TSP account, and almost any other retirement account. You can roll it into a precious metals IRA that holds real physical gold and silver that's stored in a third-party depository in a lockbox with your name in it, and it's insured. And this is not a taxable event. So if you were to go and take $50,000 out of your IRA and try to buy gold with that, you could do it, but you'll have to pay tax on that $50,000. But when you roll it over from an IRA to a precious metals IRA, you bypass that. It's completely legal, and you can own physical gold and silver in the IRA. And your regular financial advisor isn't going to tell you about this because it's not an option that they have.
Now, how can people contact you?
They should go to our website, which is bh-pm.com/California Insider. And again, if you Google Andrew Sorcini or Beverly Hills Precious Metals, okay, you'll see our website. When you go on there, go on the partners page and find the landing page for California Insider and fill out the online form. Okay, you put in your first name, last name, email address, how you heard about us. You can put CMAC, or you could put California Insider. And the notes section is the most important, because we offer a free consultation, and most people welcome that. Sometimes people will write in the notes section, "I'm a newbie, I don't know anything about gold and silver. Please help me get the education necessary so that I can make a good decision for me and my family." Other people say retirement account. "I want to learn how this works." Or, "I don't need a consultation. I've been buying gold and silver for years. I just want to give you a shot to earn my business." Whatever you want in the notes section helps me get you the best help from my company. And our response time is lightning quick, and we do not pressure people. We recommend that you, if you're not sure, you take a step back, talk with your family about it, pray about it if you need to. But this is an important decision, and you don't want to make a mistake by making an emotional one. You want to make one based on the education that we help provide you with.
And when you guys call Andrew, make sure to tell them that you're a California Insider viewer, so that they can take good care of you guys.
Absolutely. And we're really looking forward to speaking with everybody that reaches out. And we're available on the weekends. We're available late into the evening. So call or fill out the online form at any point, and we'll get back with you as soon as possible. You can reach out to us at 866-346-5325. And I'll repeat it again. It's 866-346-5325.
And for those of you that are watching on YouTube, we're going to leave you a link below so you can click on the link and get to the form. Thank you, Andrew.
Oh, I'm so grateful to be here, and I hope to have the opportunity to jump back on and talk about more specific issues on how gold and silver can help people.
And you guys operate with partners, right? Mm-hmm. Essentially, can you tell us how it works? How do you guys do your operation?
Sure. So in the port world, there are different models. We happen to be a landlord port. So at the Port of Long Beach and the Port of Los Angeles and most ports across California, we follow that same model. And as a landlord port, we lease land to private companies who manage and run the terminals. And these private companies in turn hire the longshore workers, the dock workers, the foremen, the clerks. And that formula resembles very much a real estate development company. So if you look at how we generate revenues, we enter into long-term leases with private companies. We develop the land, we permit it. In some cases, we build the facilities that they need. We build it to suit. And then through that long-term lease agreement, we generate revenues. And what we do with the revenues is we reinvest in our infrastructure. So at the Port of Long Beach, that's the reason why we lead the nation in investments and capital infrastructure projects. As a matter of fact, over the next 10 years, the Port of Long Beach plans to invest $3.2 billion to upgrade our facilities, to modernize our operations, and to really, literally, we're building the port of the future, making sure that we are driving efficiency, making sure that we're improving cargo flow, we're increasing capacity, all while reducing emissions. And it's a tremendous partnership with our industry partners, with our labor partners, making sure that we're building a port for the future that is going to keep us competitive while continuing to strengthen the local, regional, and national economy, and also strengthen the nation's supply chain.
California, one of the things that we're going to be needing is we import a lot of oil, but mm-hmm. we need to import some gasoline too. Mm-hmm. Do you guys have the infrastructure to do that?
We do. At the Port of Long Beach, currently we have 6 liquid bulk terminal operations. As a matter of fact, we also have the state's largest petroleum operation at one of our terminals, and that's Marathon. And most of the investments surrounding those operations have to do with maintenance and upkeep. There are no plans to expand any of that at this point. I should also note that when you look at all of our lines of business at the Port of Long Beach, containerized cargo volumes take most of the attention. That accounts for about 3/4 of all of our lines of business, about 3/4 of all of our revenues as well.
Just containers.
Just
right?
Containers, yeah. The balance of that is primarily liquid bulk. We have what we call RoRos. That's shorthand for roll-on, roll-off. These are ships that bring vehicles. We import a lot of Toyotas, for example, a lot of Mercedes-Benz, and we import approximately 250,000 cars a year. Right?
And they come through the port.
They come through the Port of Long Beach, yeah. And so we account, between the ports of Long Beach and Los Angeles together, we account for approximately 40% of the nation's goods. I mean, this is a massive gateway. This literally is the nation's largest gateway.
Are you concerned about the situation right now? Do you think there will be a major change or shift with these tariffs or the trade structure changing?
I am an optimist at heart, and I understand what is driving a lot of these discussions and a lot of these trade deals. I think the situation we're in now, where there's so much uncertainty that shippers are trying to make sense of this or trying to mitigate whatever risk comes with that. The situation right now, many of them are in panic mode, and I can understand that. But I think it's important to keep in mind that at some point, these discussions and these negotiations will come to a close. And the posture we've decided to take at the Port of Long Beach is we need to keep our eyes on the long term, mid to long term. And that's the reason why we continue to invest, we continue to build out our infrastructure, we continue to focus on developing terminal operations and the supporting infrastructure to handle more volume in the years ahead. As a matter of fact, just last Friday, we joined one of our terminal operators, ITS, at Pier G, to announce that we were breaking ground on a $365 million terminal expansion project. That's going to give them an increase of 50% capacity in about 3.5 years. So we're still very bullish on the future. We're concerned about the present day impacts of these trade policies and how that could slow the flow of cargo. But in the long term, we're still very bullish on our gateway. We're still very bullish on trade. 90% of the world's trade is carried on a ship. And there's a reason for that. It's cheaper, it's more sustainable, economically, environmentally. So I don't see that shifting very much. What may happen is things like what we're seeing in sourcing, where some of the manufacturing and that market share may shift from places like China to Southeast Asia. That may continue. We may continue to see nearshoring, where some of that manufacturing will come closer to the U.S., either in Mexico or even in the U.S. outright. But I think that those trends are longer term. And there's a reason why most of the sourcing continues to come from China. Most of the products that we import continue to be made in Southeast Asia. And until those economics change, there's always going to be that inherent incentive for shippers to bring in their goods from those countries.
Do you guys do a lot with Mexico, or does it not make sense to ship from Mexico and usually?
Very little. In fact, 90% of the trade between the U.S. and Mexico is via land border on truck because of our close proximity. And Mexico is an interesting topic, right? Because just in the last year and a half, they've emerged as America's #1 trade partner. And I think that some of these shifts in trade policy, notwithstanding some of the tariffs levied on Mexico and Canada, but when you look at some of the tariffs levied on places like China, Mexico is going to continue to be a strong trade partner for us. From a maritime perspective, because 90% of the trade between our respective countries is over land, I don't see a lot of movement. But there could be a scenario in the future, right, down the line where the ports, big ports like those in California, primarily Southern California, may partner with ports in Mexico, for example. And there might be a hub and spoke strategy, for example. The potential's there, but a lot of work would have to be put into that in order to make waterborne transport of goods between our countries more economically cost-effective than what we see today, which is via land border.
Do you have any recommendation for business owners that are in the trade space?
Yeah, you know, we talk to them almost daily. We're asking them what they're hearing, what they're seeing, how they're navigating this. There's a lot of uncertainty out there in the marketplace. Most of them are looking forward. They're looking ahead. And I would say don't panic, right? You don't want to overreact, because at some point these discussions will come to a close. At some point we'll have a little more certainty. And what we don't need is for everyone to overreact and bring their shipments all at the same time. We saw that during COVID. In the year 2020, when the pandemic spread and folks were being confined to their homes, that first half of 2020, it was a famine time at the Port of Long Beach. I mean, there were hardly any containers, hardly any ships that were coming. But in July of that year, 2020, it was like on the turn of a dime, right? We went from doom and gloom to fast and furious. And so that's what happened. Everyone wanted to get their shipments in at the same time, and that created a lot of backlogs
The
and
jams
delays.
that you guys had.
The
We had you
logins.
on the show.
Well, the
You were
last time I
explaining-
was here with you, we were talking about the 109 ships, that were
That were
waiting to
stuck on
anchor.
there.
But I'll tell you this, we've learned a lot since those days. We've learned a lot. As a matter of fact, in 2024 at the Port of Long Beach, we had a record year. We handled more
bigger than the year that you had.
bigger
during
than
the pandemic.
2023, which was our last record during the pandemic. Thanks to our dock workers and our terminal operators, we handled 9.6 million TEUs. And you know what the difference was? There was no congestion. There were no backlogs. There were no delays. We didn't have even 10 ships waiting. That's the difference.
You didn't make it into the news. How did you guys do it?
Well, it's like they say, right? When everything goes wrong, it's for headlines. But when everything goes right, no one really pays attention. I think I attribute a lot of that to the lessons learned. A lot of what I call muscle memory, right? We learn to work better together. We learn to share data. We learn to coordinate better. All of us have more data than we ever had. We
With
know
the truckers and the other parts of the supply chain?
exactly the trucking companies, the railroads, the shippers themselves. We have greater visibility into warehouse capacity, just 70, 80 miles down from here in the Inland Empire. So all of us are doing a better job of understanding what our respective capacities are. And we're sharing information better. We're coordinating our efforts better. And that's why I think we're doing such a better job, even with these record volumes.
Now, you mentioned the 700,000 people that is employed through supply chain, through your port's activity and LA port, right?
Yes.
And there's 1 million in California. Do you have any thoughts for the people that are in this space that might be watching the trade situation?
So far, we've had a very busy first half in 2025. May and June were the 2 months that we saw cargo volumes decline. And in those months, we did see, unfortunately, some dock worker jobs were impacted. Some trucking companies were impacted. We think the second half of this year is going to be strong. These new deadlines for the retaliatory tariffs, the conclusion of the 90-day tariff pause with China in August, those are going to set artificial deadlines. So we're going to see some mini peaks again. So I think for the second half of the year, if we're going to be down, it's going to be negligible. I think it'll be anywhere between 5 and 10%. And what that means for the whole year, between January and June of 2025, we were up 10% over our record year last year. So if we're down 5 or 10% the second half of the year, that means we're going to be right in line with where we were last year.
So you're still at the record level.
So we think that we could have another strong year unless something changes drastically between now and then. So I would say to those partners in our industry is don't panic, don't overreact, stay vigilant, stay patient, and let's continue to work together. Let's continue to keep the economy moving, because as I like to say, goods movement is literally the economy in motion. I mean, those containers that cross our docks generate 1 million jobs in California, almost 3 million jobs across the nation. And that's just the Port of Long Beach alone.
Now, you guys must have predictions on the economic forecast for your port. Do you have any predictions how much the volume would drop? Do you predict a drop in volume?
We do every now and again. We commission a long-term cargo forecast, and we use that for infrastructure needs, et cetera. And we do try to factor trade policy, right? But we have something that's nearer term, and we call those projections. And what we do is we look at the schedules of these shipping lines, and we look at the service schedule. We look at how many ships are in that rotation, if any of them are going to be in the industry. We call them blanked, which means that they're going to cancel them. In some cases, when capacity, when demand increases, there's not enough capacity. They add ships to the rotation, and we call those extra loaders, right? So we track all of that, and that's what leads us to our projections. And so based on all the information we have available to us today, we are projecting that for the second half of 2025, if we're going to be down, it'll be anywhere from 5 to 10%. And when you combine that with the first half of this year,
you're still doing well.
We're going to end 2025 right in line with where we were in 2024, which again was a record year for the Port of Long Beach.
If you like our interviews on California Insider and the topics we cover, you will like the newspaper Epoch Times. This newspaper is very unique. Not only we cover many interesting topics, we talk to different sides of an issue and consider everybody involved in a story. Now, some stories this week that we covered in the paper include how California is about to lose 17% of its refining capacity, according to the Energy Information Administration, with a couple of refineries planning to leave California. We're following this story closely in the paper. We also had another story, how home prices in San Francisco are surging. In certain parts of downtown San Francisco are going up again. There was a poll by UC Berkeley of 6,000 Californians, Republicans, Democrats, and Independents. Most of them believe that special interests have too much power in Sacramento. We have this story in the paper this week. There are so many other interesting stories that we're covering in California. And our coverage is every day live, 24/7. We're covering not only state-level issues, we are also covering international and national issues. Make sure to sign up to read these unique stories. There's a link below. You can get it at $1 a week for the first 4 weeks. Now let's go back to the interview. Now, Noel, you guys compete with the Port of LA. Can you tell us about this relationship? It's fascinating that you have competition, right?
Yeah.
And you're next to each other, right?
We're literally next door neighbors. And for most of the world, they view us as one complex. And that's the reason why we're known internationally as the San Pedro Bay Ports Complex, which is composed of the Port of Long Beach and the Port of Los Angeles. Between the two of us, we have 12 container terminals. And the shipping lines decide where that cargo is going to go. And so as port authorities, what we do is we develop our land, and we try to maximize and optimize our operations to deliver greater value to our customers. And it's all about reliability, velocity, efficiency, predictability. This groundbreaking that we just announced last Friday in partnership with our partner ITS, that's going to add 50% capacity to that one terminal. That means that in 3.5 years, that terminal by itself is going to be able to handle 50% more containers. And these are the kinds of smart investments that we're making at the Port of Long Beach. We're literally building the port of the future. We're expanding capacity while reducing emissions. We strive to become the world's first zero emissions port, and we're going to continue to increase capacity. We're also investing aggressively in rail. Our Pier B on-dock rail support facility is going to enable us to nearly double all of our container movements. So think about this. Right now, about 75% of all the containers that arrive into the Port of Long Beach, they leave our port on a truck. That's a lot of truck traffic in and around our neighborhoods.
In your area.
And on the freeways, most of them destined to the Inland Empire. With projects like Pier B, and by moving more containers directly from a ship to a train, we're reducing truck traffic. And as it turns out, it's even more efficient, because think about this. Now we can send those containers straight to all the key inland rail hubs: Dallas, Chicago, Memphis, Kansas City. And they go straight from the Port of Long Beach to all these inland ramps. So we think that in the years ahead, as we build out our rail infrastructure, the ratio between trucks and trains is going to shift. And that's what's going to enable us as well to handle more cargo. So yeah, so we collaborate with our neighbor, the Port of Los Angeles, when it comes to environmental initiatives, when it comes to safety and security. There are times when we collaborate on infrastructure projects, common infrastructure. When it comes to containers, volume and cargo, our terminals do the marketing. They're the ones who are competing for that
So
business.
people pick which
Yes.
terminal. And
Yes.
that probably helps you guys to stay efficient, because if you didn't have anybody to compete with, you will be competing with other ports, right?
Yeah, I mean, that I've heard that from customers, right? That the competition between the terminals, right, on either side of the bay, actually drives efficiencies, drives value, and that's what makes our complex better and more competitive.
Quickly on the trains, how much more efficient is that cost-wise and compared to the trucking?
Well, let me start with this. We estimate that for every train, we can remove up to 750 truck trips. That's how big.
Just one
train, right?
With how many containers?
An average size train these days probably has about 400 to 500 containers. When it comes to the economics, you'd have to track it throughout the entire supply chain, because what often happens is when a container gets pulled out of a port terminal to a nearby warehouse, for example, the Inland Empire, that's one part of the trip. Then the contents are removed and they're placed in a domestic container. And then that 53-footer gets transported via truck to some of the key inland points, right? So those are the economics when you want to compare train versus truck. There's a lot of movements. There's a lot more.
You have to go to a warehouse, switch to another one, and then go to another hub.
Exactly.
So here you're thinking the train will go directly.
It's from a time standpoint, most of the time it's more efficient, because you get that product straight into these rail yards. And then from the rail yard, a lot of these shippers send trucks to pull them out into the warehouses over there. It gets the product to market faster.
There is a lot of trucks in your area. Is that going to change? It's because there's some level of pollution because of the trucking work.
Well, we're taking a number of steps to reduce overall emissions. 2025 is a milestone year for the Port of Long Beach, because it marks the 20th anniversary of our groundbreaking green port policy. Port of Long Beach was the very first green port in the world. And that was a bold declaration made at a time when there were a lot of skeptics. There were a lot of naysayers who were saying at the time that if we tried to go green, that would be the beginning of our end. Well, the opposite is what ended up resulting. And the reason for that is because of the strong collaboration of all of our partners. All of our stakeholders stepped up. They joined us in this. And the Green Port policy has evolved over the years into a cleaner action plan that we jointly implement with the Port of Los Angeles. And we're at a point now where we've reduced every category of pollution to the tune of 98%. If you look at diesel particulate matter, nitrogen oxides, sulfur oxides, even greenhouse gases, every category of emissions at the Port of Long Beach has declined significantly. And we're not done. We have the two most ambitious goals of any ports in the world. We are on track to have zero emissions cargo handling equipment by the year 2030. That means that every piece of equipment on a container terminal today is going to be zero emissions. And then by 2035, we have a goal of having zero emissions trucks. So while we may have more trucks in our roadways, those trucks are going to be cleaner. They're going to be emitting less pollution. And so that is a testament to a bold decision that the Port of Long Beach made back in 2005 that is paying huge dividends for our communities and those in our neighborhoods and those across Southern California.
Do you have much of a say into the ships? Is there a lot of emission by the ships, and do you guys have much control over that?
As a port authority, we do not regulate ships or ship traffic. That's international jurisdiction. But what we are doing is we're collaborating with our shipping line partners, and we're collaborating with them to meet the IMO goal of net zero ships by or around 2050. And the way we're going around about that, I should say, is we're entering into these green shipping corridors where we are partnering with ports overseas in concert with our industry partners, the shipping lines, the terminal operators. And we're developing a framework so that we can accelerate the transition of these ships to use cleaner renewable fuels. So that's a work in progress. We're very excited about those prospects, but I can tell you that our shipping line partners are very motivated. They're working very closely with ports like ours, and they know what our goal is, and they're working with us to try to meet those goals as quickly as possible.
Noel Hacegaba, Chief Operating Officer of Long Beach Port, it was great to have you on California Insider.
Thank you for having me. It was a pleasure to be back.
Let us know what you think about the activity levels at the ports. Do you think the trade volume will go up or down from here? You can always comment or email us at siamak@californiainsider.com. This is Siamak Khorrami with California Insider, and we'll see you next time.